Welcome to Thoughts on the Market. I'm Michael Zezas, Head of Public Policy Research and Municipal Strategy for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about the intersection between U.S. public policy and financial markets. It's Wednesday, May 26th at 10:30 a.m. in New York. The financial press has inflation on the brain, and understandably so given some recent upside surprises in inflation data. And last month's jobs report featured much slower than expected job growth, stoking fears of a labor shortage and rising wages as a result. That's got some investors worried that inflation fears might make Congress lose its nerve on approving the multi-trillion-dollar Build Back Better plan. But that's not something we're worried about, mainly because inflation doesn't seem to be something voters are worried about. Take the latest Gallup issue poll, where only 3% of voters cited deficits as a key concern, and only 2% of voters cited inflation as a key concern. That makes sense when you consider how long it's been since realized inflation actually negatively impacted the lives of most Americans. And while that certainly could happen, perhaps even prodded by this big infrastructure package, it's unlikely to happen soon enough to influence how Congress votes on this otherwise popular set of proposals. Even if you did continue to see inflation surprises, they'd likely have to be quite substantial and happen very quickly to change the trajectory in DC. That's because Democrats might see some inflation as a feature, not a bug, when it comes to the effects of their policymaking. Consider the latest University of Michigan Consumer Sentiment Survey, where consumers did cite inflation as a concern, but they also generally expressed more economic confidence due to job and wage growth. Recent headlines from several prominent companies raising the wages of their workers due to labor supply issues mirror this. So consumers, for the moment, are signaling their willingness to trade some inflation for wage growth. Democrats would like to be on the same side of that trade, which means rising Republican criticism of infrastructure policy plans as inflationary probably won't stick, or at least won't stick in time to affect legislation. So the bottom line, don't expect inflation to derail DC on a fiscal policy that will match moderate tax hikes to aggressive infrastructure spending. That means some more near-term deficit growth. So government net spending will continue to do its part to support the sharp economic recovery that our economists forecast into 2022. Thanks for listening. If you enjoy the show, please share Thoughts on the Market with a friend or colleague, or leave us a review on Apple Podcasts. It helps more people find the show.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.